risky investments that you can and can't make. Look, welcome to my channel today. In this video, I'm going to share with you a topic about risky investments. Now, before I do that, I want to share with you 4 core principles. That's right, 4 core principles that I learned from Tony Robbins at his Platt Financial event so that I can put these principles in my own investing world. I've used them for years now, and it's made me a whole lot of money. The first is it's really what Warren Buffett's rule is. Don't lose money. So look, when we're talking about risky investments, you can't be making these risky investments that you completely go bust on, because that's opposite of the goal. And I see way too many people putting all their eggs in one basket and they get their asses handed to them. The second principle is called asymmetrical risk reward. Now, here's how that works. If I'm going to make an investment and I'm going to be wrong 75% of the time, like I know that, and I can't lose money because that's rule number 1, I have to make investments in something that's actually a reduced risk. But asymmetrical means is my risk is reduced and my upside is big, like 10x. So simple math, if I invest $100, my risk is that the very worst, I'm gonna lose that $100. Can I live with that? Yes, but I prefer not to even lose that. But the upside is that $100 turns into at least $1,000. That's how you make a whole lot of money. The mistake is, everyone says in order to win big, you gotta risk big. I actually don't believe that. Which leads me to my third principle I learned from Tony, and it's called massive diversification. If I can be in 15 uncorrelated assets, that way when I'm wrong, because no one's smart enough, including me, to get all their investments right or to predict the future, to know exactly what's going on, no matter how many charts we read, no matter how many YouTube channels we watch, no matter how many seminars we go to, none of us are so smart we're always gonna get it right. So what we have to be able to do is be diversified. Sometimes we're gonna lose. And probably not all the time are we gonna lose where we lose the entire investment. That's just what I come to find over the years. But there are gonna be investments that we make, we just don't make any money. We lose money, but we don't make any money either. And then the third thing that we really wanna see happen, and more often than not, is where we make a whole lot of money. So I've got 2 investments right now. One of them, it's up over 150% in the last 12 months, and the other one is up 105% in the last 6 months. This is what's called a triple-digit rate of return. And those are 2 different investments mixed with an asymmetrical on principle 2, but it's not all in one, because guess what? I have another investment I did once, and if I had put all my money in it, if I risked big to win big, guess what? I lost all my money in that investment. That particular investment was only $7,500. I knew that I could afford to use that or to lose that money. But the mistake that a lot of people make is, instead of going diversified and putting in the amount that they feel comfortable with losing if they're wrong, they end up putting a whole lot of money because they get emotionally attached. Here's a prime example. I love Bitcoin. I made a lot of money off of Bitcoin. I still own Bitcoin. But do you remember a couple years ago when it was going up and up and up? We clipped almost $69,000 per Bitcoin, and more people started to buy. Then all of a sudden, the market dropped. It fell by like 70%, and so many people lost so much money in Bitcoin, because what happens is when it dropped, well, guess what they did? They sold and they took all their losses. Some as many as people as losing $800,000 or $1 million or multiple millions of dollars because they tried to go big. They risked it all and they were wrong. And I want that to be a lesson to you, that you will be wrong in your investing. So go through diversification. The rule of thumb that Ray Dalio taught us when we were in Sun Valley, Idaho, is very simple. 15 different uncorrelated assets. That can be cash value, gold, silver, real estate, private equity, stocks and equity. Like, the list goes on and on. We got to get energies. We want to get into 15 uncorrelated assets. And then the 4th core principle is called tax-free wealth investing. Look, our objective is to reduce our tax burden, especially we see the deficit in the White House administration today, and they just keep printing more and more money and creating inflation. So you got to be making sure that your investment is tax incentivized to be able to reduce your tax bill. That's the biggest robbery in your life, is how much you're going to go pay in taxes. So it gives a whole new meaning to risk when it comes into your investment. Look, at some point you do got to take risks. No matter how many questions you ask, how much due diligence you do, you're never going to be able to fully resolve all of your concerns in order to move forward with an investment. And when you do make an investment, you've got to make sure that the dollar amount that you put into there, that you're willing to lose it all. Now, it is very, very unlikely you'll lose all your money. Which is more likely is you just won't make money or you'll lose some of it, which we want also though, a good chunk of the time, we win 10x. So let me give you an example. If I invest $100,000, what I would love to see happen is 100,000 turns into $1 million. That's a 10x asymmetrical investing. Now, there are 5 different levels of rates of return in investing, and my friend Chris Crone teaches that in his book, Have It All. You can go check it out. And the first is a single-digit rate of return. This is the least riskiest. I can tend to put more money in that. The downfall with this, even though I'm not going to lose money more than likely, where I'll really get my ass handed to me is inflation. Because if I'm only growing 6, 7, 8% per year, and inflation was as high as 9% over the last couple of years, according to the official CPI, really probably 15, 16%, then I'm actually behind on inflation. But that's the first, single-digit rate of return. Second is double-digit rate of return. I'll give you an example. I'm looking at 2 investments right now. One is a multifamily investment. It's a 4 to 7 year exit, and I will average on the projections 19% annualized every single year for about 7 years. That's through cash flow distributions plus the upside of my equity growing in the multifamily project. This is a very hands-off. I'm not the one organizing it. I'm not the operator of the project. This is really, truly highly leveraged investing, which an investment is a lump sum payment for a future return on investment or a future income. Now, if you look at that 19%, is it a home run? No, but 19% sure stays ahead of today's inflation. Another project I'm looking at is called assisted living facility, where I will make around 32% project returns over 20 to 22 months when I'm gonna get my money back, which is annualized about 19% as well. The cool thing about this is I get my money back so much quicker. My illiquid becomes liquid faster, which is a whole other method of investing. But guess what? If I go all in on assisted living and I'm wrong and I lose all my money, I'm gonna be very, very upset. But if I go in on assisted living and I go in on multifamily and I go in on Bitcoin and I go in on gold and silver and I'm wrong on the assisted living facility, guess what? I still have all my other investments that are growing or breaking even, and they'll have some of these that are gonna do really, really good. Let me give you one other example. An investment that I did is I invested in a private equity for an Orange Theory Fitness. And it was a distressed studio that we picked up for peanuts. By the time things are said and done on that, over a 3 to 5 year exit, I will be able to almost 10 to 12 times my money. 10 to 12 times my money in just 3 to 5 years. I want to do more and more on those types of deals. But guess what? I could be wrong on that project and I lose it all. I don't think I am on this one, but my point is you are not so smart that you're going to get all your investments right. You will lose money at the worst, and sometimes, which is probably the most time, you just won't make that much. You'll make small gains or minimal gains or maybe even lose a little. But once in a while, this is 25% of the time, this is what we do, is like that project I was telling you about where I will 10 to 12x my money. I've got those 2 other projects I told you about that are up 105 to 150% on 2 different projects. But see, what I'm talking about is multiple projects. This is the whole key through diversification. This is how you massively reduce your risk and you still get really, really risky throughout the process. Look, if this video added value to you, share it with someone else. My number 1 mission right now is to help people become excellent money managers, and they're making their part-time business an incredible investment company so they can grow their active income, but they can also grow their leveraged residual income and create business freedom, financial freedom, and soul freedom. Go ahead and share your comments down below. I'd love to hear what your thoughts are on risky investing, and I want to make absolutely certain that you smash that like button. Thanks for being here. Come back to my next video and I'll see you soon. Look, I want to say thanks for watching my video. And I know that this isn't for everyone, but it is for certain people that are ready to make big changes. Like they're ready to create residual revenue. They're ready to become real business owners. They're ready to have a business that makes money even when they're not working. And if that's you, I want you to click the link down in the description, and I want to give you an opportunity to have what's called a triage discovery call. We're gonna meet with my head coach and learn where you're stuck in your business and what changes you gotta make so that you don't have to work to make money. And I want to say it again, I know that sounds crazy, but imagine you took time off and you still made money. That doesn't mean you don't have a business to grow. You absolutely do. But I'm going to teach you how to grow a business that makes money even when you're not there working. So click the link down below, get your free consultation with my team, and let's really discover where you're at and how you can create it. We'll see you there.